Hey, what's up, guys? Welcome to the Texas Mortgage Boss Podcast. My name is James J. And today we are on video number 2 of our eight video 4-week series for first-time homebuyers. So last week we discussed what type of down payment do you need to get into a home. So if you haven't watched that, go back and watch that. This week we're going to talk about what type of credit score do I need to be able to get into a home? What credit score do I need to get into a home? Now, before I start, let me give my disclaimer, okay? There are a lot of gray areas when it comes to credit scores and qualifying for certain types of loans, okay? All right, so what do I mean by that? What I mean is I'm going to give you an ideal credit score for each type of loan, okay? Does that mean if you don't have that score, you can't qualify? No, it does not mean that. So that's where that gray area comes in. Now, there are some other things financially. If you've got great credit history, if you've got reserves, which means money in the bank or money in a 401k or something like that, these are other what we call compensating factors that could help a person if maybe their score is not exactly where we would like it to be. All right, so I already know somebody's going to look and say, well, my lender can do a score at 580 or 590. Okay, probably that exists. You're going to pay for it quite a bit. If anybody can do it, you're going to pay quite a bit of money if your score is under 600 and you're trying to get any type of a loan right now. Okay, so disclaimer, does not mean if you're not at what I'm suggesting that you can't get a mortgage loan. All right. The higher your score, the better. Okay. The more it benefits you financially as a buyer, you want to have a higher credit score because if you're in the lower side of the credit score, if you're under 600, for sure, you're going to pay quite a bit of money to get that loan if you can qualify at all. Okay. All right. So let's get into it. We're going to start with FHA, VA, and USDA loans, okay? Now, 620 would be ideal. It's not the best, but it's not the worst. It's pretty close, but it's not the worst, okay? At a 620, the way interest rates works, it's typically going to be tiered up between like a 600 to a 619. When you get to 620, you kind of go to a different tier from 620 to 639. At a 640, you kind of bump up a little bit more. So a 620, for me, again, this is my opinion. This is based on the loans that I've done. A 620 or higher is where you want to be on any one of these 3 types of loans. Now, VA, if you're a veteran, VA will say, hey, we don't really have any requirements. But the lender's going to have their own requirements as far as getting the mortgage and what that ideal credit score needs to be. 620 is ideal. Does not mean if you're at a 610 or a 605 that you can't get a mortgage loan. Just know it's going to cost you more money. It's really that simple. That cost, that extra additional cost that you're going to incur with a lower score under 620, it may be so much that you can't afford to buy the home. All right. So just keep that in mind because I know there are people that are going to say, oh, I can do it lower than that. Probably, but you're going to pay for it. All right. You want your score to be as high as you can possibly get it. But if you're at a 620 and you can get qualified for a mortgage, waiting another 6 months or 8 months or 9 months or whatever the case may be to get your score up, if the interest rates are going up and you're waiting a year to get your score up, it may not really make sense. Now, let me say this. There are things that I can do. I can look at a credit report. And if I can get you from a 620 to a 640 in a matter of weeks, I'm going to do that. I don't want you to get a loan at a 620 where I can look at your credit report and automatically say, hey, this is a pretty easy fix. All we need to do is this, and this, and we can get you up to a 640. Okay, so now you're at a different level or higher, a 640 or higher. So keep that in mind. If you're at a 620, let someone look at your credit report. There might be things that we can look at, real simple things that you can do to bump that score up. If you're at a 620, you can get to a 640. If you've got maxed out credit cards, that's an easy fix right there. It's an easy fix. So keep that in mind. I'm going to do everything I can to get your score as high as I can make it, or as high as we can get it, and I still be able to maybe meet your timeline for being able to own a home, if it's 30 days, 45, or 60, whatever the case may be. All right. Conventional, okay? 680 or higher. Again, I'm giving you ideal numbers here. If you're not at a 680, can you qualify for a conventional loan? Yes, you could. What happens though on a conventional loan, the lower your score goes, two things happen. The rates are going to go up, and so is your mortgage insurance, because unlike FHA, VA, there's no mortgage insurance, but unlike FHA, USDA, which they are the mortgage insurance on an FHA loan and a USDA loan, it is not based on your credit score. Okay, there's just a flat fee. It doesn't really matter what your score is. It's a flat fee that everybody pays across the board. Conventional loans, on the other hand, are highly credit score driven loans. Okay, so what does that mean? Number one, again, lower your score. If you're under a 680, interest rates are going to go up. Number two is your mortgage insurance. Okay, assuming you are not putting down 20% and you're going to get a conventional loan and not put down 20%. Okay, so you're going to put down 3% or 5%. This is a first time buyer series. If you're a first time buyer, you can probably get a 3% conventional. Okay. The mortgage insurance is going to be based on your credit score and the down payment largely. Those are the two big things, your credit score and the down payment on conventional loans. So if your score is at a 650 and you're trying to get a conventional loan, your mortgage insurance is going to get high. Okay. So again, I'm going to look at that report. I'm going to see what can I do to get your score up. And there might be some simple things. Sometimes there's not a lot to do that's going to be able to get you to a point of bumping up your score 10 to 20 points in a short amount of time. Okay. It just depends on everybody. Again, just depends on your situation. Everybody is different. But conventional loans, if you're under a 680, it becomes more challenging. Not impossible. Not saying you can't get a loan if you're under 680. I want to be very clear when I say this. I am not saying you can't get a loan at a 680 if you're under 680, excuse me. So keep that in mind. You want the score to be high as possible, but conventional loans, very, very, very credit score driven loans. They are not as lenient as FHA and VA or USDA. Actually, USDA is not all that lenient. FHA and VA are lenient. Conventional, nowhere near as lenient as the two of those. So that is where we end it for today. Okay, so that is credit score. Next week, we're going to get into two additional topics, and just make sure you share this. Again, I'm trying to work and encourage 10 people, first-time buyers in the month of May. That is the goal. 10 people that might be on the fence, not really sure about it. This is designed to help them navigate through what's going on in the market right now, because it's pretty crazy as a buyer. It's still a good time to own a home if you can get the home, and interest rates are still very good. So keep that in mind. Send me a DM. Go check out TexasMortgageBoss.com if you got questions, and I will be back next week. See you guys on the next video. Have a great day.